out of the ordinary insights. Brought to you by Investec Specialist Bank.
Hello there and welcome to Captains of Industry. I'm David Williams. The man in the hot seat this evening is MarcelvonAulock, who is CEO of the Tsogo Sun Group. Hi Marcel, let's start with Tsogo Sun, and I think it's one of those interesting sectors. The cell phone sector is another, pay TV is another. A sector which didn't actually exist 30 years ago, say, has had to be invented and of course has been filled with interesting companies and lots of revenue and wealth creation. So Tsogo Sun didn't exist, Southern Sun did, and of course there were the so-called homeland casinos that we had, but this is a new company, so give us the context for it.
I mean, yeah, that's right. The introduction of the gaming industry into South Africa changed substantially post-94 when the decision was made that the urbanization of casinos would be allowed. So there was a very well-run process at the time to develop a new industry. They allocated casinos across the country in specific catchment areas. Each province got allocated a certain number of licenses, and it was an open bidding process. Obviously at the time Sun International was the only operator who had most of the homelands casinos, and they came about as a divorce, if you like, between Southern Sun and Sun International that was from back in the 80s. Because both companies originally started by Sol Kerzner.
Yeah.
That industry, or that bidding process was very well run, and there was a lot of interest in it, and a number of new companies formed. Soho was one of those. It was a joint venture between Southern Sun, that was at that stage a purely hotel company, wholly owned by SAB. It had been through the mill and was largely rescued by SAB in the early 1990s, right at the end of apartheid, when the economy was extremely closed and the hotel industry was in dire straits.
Those are the days when SAB owned everything.
One of them they had to rescue was Southern Sun. And they had fixed this company up. Ron Stringfellow had taken over. They turned the hotel company around, and the next step of that was to enter the casino market. And Ron and Jabu Mabuza, who was my predecessor, put together essentially what was Soho, which was a consortium of Black Economic Empire investors and SAB, where SAB put up the cash and they went for the new licenses. And the most successful part of that was they got the Monte Casino license, and then latterly the Suncoast license in Durban.
When you say Monte Casino license, Monte Casino didn't exist then. They got the license to build something there.
They got the license to build something in Fourways, which has turned out to be arguably the most successful casino development in the country. And was really the heart of what became Soho, because that gave the group the scale and the size that it eventually allowed it to build everything else on from there.
I just wish they wouldn't put the blue skies and the sun on at night. Do they still do that? It's very weird. You go in there at night and it's daytime.
It's part of the theming.
You still do that?
No, we still do. Part of the theming, and it's been a very successful development. We've had footfall that is, I think it's 8-9 million visitors a year through the footfall counters. It's developed it started as the casino with one hotel with restaurants, etc. It's developed to 3 hotels, multiple parking, office developments. So it's been a great success for us.
So just give us the picture then of the weight of where things are, the weight of the assets, if you like. You've just mentioned Monte Casino. That sounds like the flagship now of the group. In terms of revenue and profit, how much does that give, and what are the other main parts of the operation?
So after the initial licensing process, the group effectively had 5 licenses, and there was still the Southern Sun Hotel Group, and the holding structure was a joint venture between Southern Sun and the empowerment parties. In 2003, we did the swap-up transaction, which effectively brought the empowerment parties in Soho into a new holding company at the top and made the gaming operation and the hotel operations underneath wholly owned subsidiaries. And that was a very successful transaction, because what it did was it gave us free access to the cash flows of both businesses. It bulked the businesses together, and that was the start of what became Soho today. At that stage we were probably 60-70% gaming, 30-40% hotels, and then hotels had a strong growth period during the 2000s, as did gaming, but hotels in particular had a revival as an industry, and there was a lot of new developments came into the market, and there was a boost in the rates and the occupancies that hotels were achieving. And so the businesses grew pretty similarly through the 2000s. The next big transaction that happened was in the Gold Reef merger, which brought primarily more gaming assets back into the business. That merger has been quite successful. It was concluded about a year ago, and that's given us a portfolio now of around 90 hotels, a little bit over 90 hotels, and 14 casinos. And if you look at our revenue line, we do about 10 billion a year in turnover. 60% of that is gaming, tables play, slots play, with the balance being food and beverage and rooms. Also, whilst the hotel business is quite small relative to the gaming, it's 25-30%, it does represent 25-30% of the hotel market in South Africa, because the Southern Sun Group, which incorporates now the Sun Hotel Group that incorporates the Southern Sun brand, Garden Courts, Stay Easies, is by far the largest hotel group in the country and is a pretty significant player in the tourism industry.
What about the sector? And you mentioned gaming and the so-called sin taxes on gaming and cigarettes and alcohol. These can be controversial areas to be. I mean, at their worst, it's families being left in the car when people gamble all night. It says, be a responsible gambler. And what was it? What's the phrase?
Winners know when to stop.
Winners know when to stop. Well, I don't believe that. A lot of people lose money on gambling. So, how do you manage the perceptions of an industry where people do lose money?
It is an industry like alcohol is an industry, but it's also a very good industry like alcohol is a very good industry. The vast majority, and we've done the research through the National Responsible Gaming Program, etc., the vast majority of people, like 98%, treat gambling as entertainment. So they know that they don't expect to win. And we're very particular in our advertising not to advertise life-altering wins. If you remember 10, 15 years ago, it was massive jackpots and more millionaires more often and that sort of thing. We moved away from that as an industry. The sort of concept of a destination where you go to change your life is not what the industry is about. It's a locals casino environment. People visit regularly and spend relatively small amounts of money more often. And
so you go and you're going to spend 200 or 300 rand and that's it.
You treat it like a night out. And the pricing point that gambling happens at is very similar to the pricing point for going to the theatre, going to rugby games, spending food and beverage in restaurants. So it's an entertainment spend. As long as you are selling alcohol, you have the risk of people abusing alcohol. As long as you have gambling, you have the risk of people abusing gambling. And that we try and manage through the Responsible Gaming Program, through systems like self-banning, through the ability to have counselling, etc. But it is a very small portion of the problem gambling market. Where you get problem gambling, where gambling affects the poor, is generally your illegal gambling, like your dice and ifafi, and the lotto. When the lotto is based, the counter that sells lotto tickets right next to the food and beverage or the bread counter in the supermarket. Casinos are high stakes gambling and they don't attract the poor. Our market does well when two factors are in place. A, the consumers factually have money, which the poor don't, and the consumers feel wealthy. So there's a sentiment drive behind it that allows people to spend on what they recognize is a luxury spend.
I've got money to dispose of.
I've got money to spend and I'm happy to use it for entertainment where I'm not expecting to get a product at the end. I'm not going retail.
Is it true that a little bit like people claim about cigarettes and alcohol is that in bad times people gamble more because they're miserable and they're desperate? No?
If you look at our numbers have seen it through the recession. So gambling is fairly hardy, but that's because it's a relatively low spend. So the ability, it's not like you have to be in extremely good times to afford new assets. You can gamble through the cycle. But the gambling spend doesn't go up when times are hard. It in fact goes down. And people acknowledge that this is not a way to change your life. This is not a way to relieve financial burdens. It allows you to, it's just an entertainment spend. And you only spend what you can afford to spend. What
would be interesting, just take it from, not from your point of view, but from the economy's point of view, and we're always looking for signals, what does gambling tell us about the economy? Do you lag? Do you lead? Are you comparable to retail, to cars?
It's been quite a challenge to find something that we can track, because we ourselves are trying to get a better model of what we can forecast gaming spend with. Where we've seen is that we've lagged the retail growth, but there was two issues behind that. Firstly, we don't have the ability to expand capacity like retailers do. So they can build more stores, whereas you don't just go and open up more casinos.
So that's also a barrier to entry, of course.
It's a barrier to entry, but it works in its environment. So you could have multiple retailers or a retailer opening multiple stores in an area, tapping little pockets of demand that we're not able to do. But in general, it should, over long periods of time, track consumer health. Does the consumer, the middle market, does it have money, and is it willing to spend that money? One of the factors that make consumers feel wealthier is house prices. Even if you have no intention of selling your house, moving somewhere else, the fact that it's your single largest asset and it's increasing in value makes you feel more comfortable about everything else in your life. You'll spend more on your holiday, you'll spend more on your entertainment, you'll spend more on your lifestyle. And as long as house prices are under pressure, that sentiment remains negative.
Well, they have been under pressure for several years.
They have, and you've seen the growth in gaming win slow down substantially over that period. In that mid-2000s that I was talking about, when the hotels boomed, casinos were growing often at double-digit rates, 20-25%. That slowed right down to where the industry actually went slightly negative. I think in 2010 it went -2%, -3%. And that was sentiment as much as people actually not having.
Let's talk quickly about the hotels. I mean, gambling in a way is newer and more interesting, but hotels, of course, your problem there is like aeroplanes. You know, every night that a hotel room is empty, that's revenue gone forever, because you've got fixed product and you've got to fill those rooms. And I think one of your key ratios is revenue per available room. The industry loves that. So how is the hotel industry doing? We were told that the 2010 World Cup would generate a huge tourism and business take-up. Secondly, that would provoke more and stimulate more usage. Has it happened?
2010 was good for us. If I talk Soho as a hotel group, in that we were the primary host of most of the teams, a lot of the organisers, etc. So we did very well out of 2010. It was good for the country in that the positioning of South Africa as a viable tourist destination, as a place to go, was unquantifiable marketing that the country got out of it. An interesting stat that puts all of this in context: the COP17 conference in Durban last year was bigger for us in Durban than the World Cup was.
Gee.
We've got a lot of stock in Durban, so it affected hotels that we owned, and they're large hotels. We've probably got 1,600 to 2,000 rooms on the Durban beachfront. But it was a big conference. It was a corporate type of conference, a lot of companies involved, a lot of NGOs, etc. And we made more money out of COP17 than we made out of the World Cup in KZN. The industry in South Africa is improving. It will always be a cyclical industry. And I think it was Kersner, the father of the SA hotel industry, who said you've got to watch two things in hotels: product obsolescence and overgearing. If you've got too much debt, you can't handle the cycle. And you can almost guarantee when there's too much debt, because you can see new people coming into the industry that know nothing about hotels, and it's all based on property values that are booming. It's always an indication of trouble coming. So you get these cycles of over and under supply. It always has been, and I think it always will be like that.
What about competition to the big hotels? Because the traditional model was those big, I think of the Durban beachfront in the 1980s. They put up several of these huge hotels. One thinks of the Maharani.
And we still own them, yeah.
Magnificent hotels. But there's been a new trend to bed and breakfast, to smaller operations. You go to Durban now, for example, and they've got those beautiful suburbs. I'm a great Durban fan, and there are lots of lovely old houses where you can go for a bed and breakfast, and you don't want to go to a big hotel.
Most people still go to the big hotel. The offering that we give on the beachfront, and we control most of those big buildings, is still the preferred route to, particularly for business travel, for government, for a lot of leisure business that goes through there. Your base services are better. Your offering is consistent. The expertise that we have in the hotel, from food and beverage to dealing with problems, etc., is just a level above that. The bed and breakfast and the guest house environment has come a long way, and it has its natural place. If you take the total room stock in South Africa, including caravan sites and everything you could possibly spend a night in, it's about 220,000 rooms or beds, of which we would, the formal hotel stock would probably be about 10%. But if you take the formal hotel stock, which is where we focus, they don't tend to compete with each other. They're different environments. And the formal hotel stock is around 60,000 rooms. Maybe a bit more.
Okay. And the conference sector?
Conference sector's pretty strong. It's, we make our money out of the bedrooms. So the room revenue is the part that makes cash in hotels. Food and beverage can be very profitable. Conferencing is good, but it generally drives room revenue. So we don't do it as a separate business for its own sake. It's part of our hotel environment. We do operate the Sandton Convention Centre, or own the Sandton Convention Centre, which is unusual in that it's one of the few privately owned convention centres in the world. Generally, they're state-owned because they lose money. But
so yours obviously doesn't.
It does after you pay your rent, but we built it as part of the Monte Casino bid. So it's part of the license that we gave to the city of Johannesburg.
Hard to believe it loses money. I mean, it's quite busy, but I suppose the overheads are enormous.
The capital cost. If a convention centre is busy every second day, Sandton is humming. That's 50% occupancy. So it's very difficult to make those convention centres work. They make money at operating profit level when you bring the capital cost in. So it's not true. They don't lose money, but they don't generate a return on the assets that are there. Yeah.
Interesting model. Well, we're going to a short commercial break. More with Sogo Sun's MarcelvonAulock when we return.